All right, so chapter 10, setup 2, shorting a trend shift. So this is a little bit more like what we saw in GameStop, perhaps. It's a little less of shorting a false breakout where we get the break over the half dollar, then we short as it comes back through, or we get the break of the whole dollar and we short as it comes back through. This is more shorting as perhaps an ABCD pattern is forming and then breaks the apex point to the downside, which then confirms that it's not actually uh, setting up for the move higher, but is actually breaking lower. Or perhaps in that instance of GameStop, this is maybe it's a very kind of fast example of a trend shift, that break below 72 right here. And again, this one is on such a micro time scale. This could be called a false breakout as well. But for sure, this was consolidation. We were trending generally up here, but if we broke that flat bottom, that was the beginning of trending back down. So this is going to be a little bit trickier because the apex point is not always as obvious, but if you're trading and watching flat bottom breakdown, break below moving average, break of a recent low, a pivot, something like that, then like right here, as that breaks the point of number one right there, that's now not an ABCD pattern, it's just stair stepping down. But the entry down here at this price is a little extended off of the high up here. So perhaps a double top up here at a half dollar, whole dollar is a starter, and then confirmation is adding as it breaks back below, one of these pivots, either here or here, right there. And then you can be adding into that move lower. So the trend shift short setup. I can't tell you the number of times I've been in a trade and said, if it breaks this level, it's over. And then when we see it break that level, we see this final flush back down towards the volume weight average price as long traders just sort of finally throw in the towel and say, all right, that's enough. It's not working. I give up. Sometimes these levels correspond to a bull trap, but more often they're a period of consolidation, such as a bull flag or an ABCD pattern, and it's consolidating, and then it just all of a sudden starts to show a little bit of weakness and then snaps through that sort of pivot low right here, and then just right back to the low, all the way back to the volume weight average price. So the best entry on this would be the apex of a pivot low or a flat bottom breakdown or break below a moving average, because then it's very clear to the penny where you should be getting in. When it's sort of a gradual, just kind of was trending up and then started kind of trending down, those can be a little bit harder to find the correct entry on. We always prefer to have an apex point because that just makes it very easy that this is the place to be a buyer. That, of course, is what or a short seller. And that's, of course, what makes the dip strategy so difficult, that it doesn't really have that very clear apex point. So if you're looking to take a larger position, then potentially a starter near the top of the bull flag where we might be getting the bull trap could be a place to begin a position, and then adding into that confirmation of the break below the apex. As always, short sale restriction and availability of shares to borrow is a challenge and will dictate whether or not we can even take the trade. The target would be that the trending trade could fade all day long. It could just keep fading lower and lower and lower and lower. Once the stock starts to be a clear topping tail on the 5-minute, and then it starts to turn into a topping tail on the daily, especially if it was off of some daily resistance like the 200 moving average, those could just fade for hours. Now, exposure time is a factor in terms of risk management. You may not want to hold it for hours. At any time the stock could pop back up. It's not maybe likely when you have a really weak setup, but it could happen. And so at a certain point, taking your profit off the table and reducing your exposure does make sense. Stop loss would generally be above the 20 moving average. If we're shorting a break of the 20 moving average, we want to see it stay below that level. Finding shares available to borrow continues to be a challenge. So here's an example right here. This is basically a very perfect apex right there. Now, this coincides with a couple of things. Number one, we do have a false breakout right here, which was over 13. So you could have taken a starter short at 13, stop at the high. That would have been the first setup we talked about, which is a false breakout. It comes back down off of a double bottom here at 1163. Maybe you cover a little bit as it comes back down here, because if it holds this level, this could set up a bull flag. Now, it's a little tricky as a bull flag because it's certainly extended off the 9 moving average with a false breakout right here, but it could happen. But you have a couple of things that you're sort of ticking off as against the trade. Now, it's not going to be a great bull flag. You've got topping tail. It's not going to be a great bull flag. We're a little extended. We also have a couple dojis. Now, if it breaks this level of 1173.63 right there, look at that. It breaks and drops all the way to 10. It breaks that level and flushes through the volume weight average price, and just like that, $1.60 a share in one 5-minute candle. It just flushes right down. Now, off of that level, it does base out and come back up. And by the way, when I said stop at the 20 moving average, that's on the 1-minute chart, not the 5-minute. So this would have most likely been below the 20 on the 1-minute before it broke right here. But then maybe in this area, it started to get back up above it, and you do see it came back up to the volume weight average price. So this was not an all-day fade. This was a short right here of this flat bottom. Let's look at another example. So on this one here, you have a nice steady move higher, a doji candle right here, a sell-off, first candle to make a new high, kind of sort of like sputters a little bit, and then opens up here, back through the high, little choppiness here and here and here. So already indicating it's a little tricky, a little choppy here. Then it does rip right here all of a sudden, and now it's coming back and consolidating. And then what's the low? 535. So when we look at the low of these patterns, when you have a stock like this that's already made its first pullback and its second, you know that it has now attracted a lot of people who are sitting sort of stalking at their prey, waiting for that sign of weakness. Now, maybe they took a short here on this false breakout and then had to cover as it squeezed higher. It doesn't make sense, but I got to stop out at the high. Then it pulls back sharply, double bottoms here at 35, pops back up, and then maybe we see a big 100,000 share seller on the ask. Or maybe we just all of a sudden start to see selling, and we think if it breaks 535, this pattern is just really stair-stepping down. Target volume weight average price, and in this case, you got a panic sell-off from $5 to under $4.50. $5.50 to $4.50, that's over $1 a share, and it was quick. It sold off for the rest of the day. At this point, the daily candle was ruined. So the open was here. So this is our open. This is our close. So the body of the candle is like this, and it has this topping tail up to here. Now it is green because we opened here and closed here, but it's a green topping tail candle. So now as a swing trade, the stock is no longer set up. It no longer looks good for second day continuation. So anyone who is long, who is thinking about swing trading it, as long as it holds above VWAP for second day, that trade got ruined as it stopped out right here. You might have had it flush down and actually pick up some live stop orders that people set on the trade. Of course, during regular trading hours, those stop orders will work, and you're more likely to see that on the sell side because more people are, of course, long biased in the market, especially beginner traders, especially swing traders, and those are the type of traders that are more likely to set live stop orders. So when all of a sudden the stock drops 20% in one candle, it's going to be hitting those stop orders, which are going to go as market orders, and it's just going to fuel the selling. And then, maybe off that level we get a bounce, but that's where you can start to get an acceleration as you start to blow through more and more and more stop levels. So this is another one this is a little tricky here on this one because it basically was just grinding higher. I mean, it was kind of weird because it was literally just grinding higher. So the bulls are taking the stairs, nice gradual move up, and then all of a sudden it hits 650, it pulls back to 6. Then to 550, then to 5, pops up for a second, then to 450, then to 4, then to 3, to 299. I mean, it dropped 50% right there. This is a perfect example of the bulls taking the ladder, taking the stairs, and the bears taking the window. Big drop. On this one, I'm not sure. To be honest, the obvious short entry on this, it's actually not super obvious. I'm not sure. Sometimes when you get those panic drops, it's kind of hard to figure out where they came from. The first pop and then the break back through the low on the 1 minute probably would have been the safest entry down there. And then a short into the close. So GLBS right here on this one, you get a pop up, a halt, and it ends up gapping, squeezing a little higher, then dipping, consolidation. Then it rips here, pulls back, goes higher to another halt, pulls back, and right here, this is a short. It's an obvious short, right? Just like the other one. They look so similar to this. But what happens? This becomes a bear trap. It dips down and then it rips right back up. And right in here, now you're like, wait a second. I was expecting something more like this. Now it popped right back up and I'm in the red. Where's my stop? And it broke below 7 and it got above 7. And then we were thinking if it can break over 710, 715, we might have another shot at 750. And that big volume spike right there was a combination of short sellers covering and long traders buying it for that squeeze from 7 up to just about 8. It was another topping tail. It pulled back again, did a very similar setup right here, except this time it did flush down to the volume weighted average price. Now, the fact is, because it made that squeeze, but then came basically all the way back down to this area, that was bearish. I mean, yes, it was bullish that it did squeeze those early short sellers, but then it couldn't hold those levels, and then it started stair-stepping back down. And then you see volume decline as long traders kind of give up on the stock. So here's another one where we've got first pullback, second pullback, little third pullback pops higher, consolidation right here at 320, right above that level. It breaks that level, and now we're flushing. And you could actually say, like, right in here is almost a little bear trap as well, because it did dip down and pop right back up. Now, it was on a second pullback, and usually, again, we would say on the third pullback, we're in a better position for a false breakout and then a short. But in this case, it maybe did a little bear trap, ripped back up, dips, goes a little higher, red choppy candle, sideways, and then sell off. Now, this here forms that kind of L pattern, right, where you've got the top here. So this sort of is forming a little bit of a bear flag at the flat bottom. Now, usually when we talk about bear flags, we're talking about a stock that is sold off strongly and that is consolidating at the lows. That's an official bear flag right down there. However, when you're zoomed in, because this candle is so big and red on high red volume, it's significant. And it starts to look like possibly that's a turning point. And then the consolidation here is right above the low. So if it breaks back above it, do you feel good going long with that red topping tail candle? You know, and the answer for me is probably not really. It's extended, it's the third pullback, I don't know. And then if it breaks 320, well, what about then? Well, that certainly doesn't look good. And that's where it starts to become like that. It's leaning a little bit more to the short side. Here's another example, similar. So pullback, second pullback, it goes a little higher, now consolidating way, way up high. And this high volume candle, it tries to break right here, and it becomes a false breakout. False breakout, and then a flush back below the low of that candle. That's a starter short. Stop is at the high. And on this one, you may not really get the confirmation to go full size on it, but it just sort of fades a little bit. Here's another one. Let's see. Looks so similar. So another one here. First pullback. Second pullback is cleaner. Now, again, look at this red candle. Choppy red candle, consolidation. It dips down, but that's a little premature to break down. Pops back up, pulls back, and then as it breaks this level right here, it flushes a bit lower. It pops back up, and what we're doing now is we're stair-stepping down, right? This one is, again, maybe not as obvious as some of the others, but it's starting to stair-step back down. So let's look at this trade again here on GameStop, just as a kind of refresher on that sort of flat bottom breakdown. So right here, it's actually looking bullish. This is looking bullish right here. It is a micro pullback for a break higher. So I'm long. I'm in the micro pullback. I'm actually up 10,000 bucks on it right here. And I'm thinking, boy, if this thing breaks over 75, my target was maybe a move back up to 95. So I was already up a lot on the day, so I was giving this a chance to work. But I was thinking this really maybe had some potential to be a nice big trade. And then I'm, of course, recognizing, okay, we dipped down to 72, but we pop right back up. Now, the fact that we dipped down to 72 by itself is not great because that's a big drop. You know, it's a strong drop, big red candle, but it does pop back up. Now I'm trying to unwind the position a little bit to reduce my risk. The fact that it did that red candle is already indicating weakness. Now, is it weak enough that I would start shorting it here? I don't know. This is a pretty strong stock. Maybe not, but it is looking weak. And then right here, now we're basically, I'm not getting my shares filled very well. I'm trying to sell between the spread. My hotkeys weren't really tuned up for this stock because of how big the spreads are. And so I have an order there at 30. That doesn't fill. I put one at 97. That's only 3 cents below the ask. And that one does start to fill, but not in full. And then here we go. We're breaking that critical level of 72. Instant drop to 70. And it just keeps going from there. It's a good thing I sold when I did because it just kept going lower. So let's see. Let's fast forward this a little bit. So now the trend is, well, this is a bear flag, but we'll look at that bear flag a little bit later. Let's see now. Yeah, and I guess that ultimately that's kind of it because it just kind of goes lower from there. So we'll look at that a little bit more when we're looking at bear flags. Let's see if I have another trade that's a good example. Ooh. All right, let's look at this one. I'm not sure if this is a good example. I just want to look through and see if there's any. Okay, so right here we're seeing on the 1 minute chart we dropped right there. Oops. We dropped right here, and now if we break below that 23 spot on PEC, that's going to be a flush potentially below the VWAP. This is a red candle on pretty high volume right here. And so the risk is that right here we drop, and then we've got a fair amount of room if we do break that volume weight average price. This could also bounce off the VWAP, but an aggressive entry would be shorting to anticipate that it's going to break. So let's see what it does. Coming to a sort of a double bottom here, right at the volume weight average price. Sometimes I would do a dip trade at this level. I could see it both ways, possibly a bounce. Let's gotta hold. 28 by 29. There's 30. And it looks like there's 16, so it's breaking a little bit lower. But it does come back up, and then at the open, sort of flushes back down. Let's see. All right, so it looks like I took a good size loss right here. Look at this. Look at this drop. All right, so on this one here, it does red to green. It sells off. It pops back up. So it's right now looking like possibly a false halt going down because it's 58 on the bid, but 72 on the ask. Back over 12, break back over the whole dollar there. That's strong. Now up to 12.57, nice. Our high a day is a little over 13. There we go, 13. So I add there 12.99. Halt going up is 13.73. There's 13.40. Now I'm sizing up for the break of 13.50, but I'm in a little high up here. The better entry would have been off the false halt. Now we're flat. Now we're basically a double kind of top at 13.50. Look at that. Back to 12.72. Back to 13. I add for the break of 13.50. Can we get that break of the $0.50? I'm sizing up. There's 13.50. So I was aggressive there to add into the break. Now it needs to go right to that halt level. And I'm unwinding as it broke through the $0.50, but I'm in at 34. So it dips down. Okay, now it bounces back up, back to 36, 38. Now this is a time where I could try to get out break even in the 30s, 40s. So we've got this bottom right down here. I actually dip traded, adding more size at 10. So now we're in basically a little bit of a bull flag here. So the low down here, if it breaks the low, that's an exit for me, and it's also a short, potentially for a short seller. And if it breaks the high, then that's, of course, confirmation that my position's working. There's 45. Come on, 46. We've got to break through that $0.50. It's not breaking. Uh-oh. And there it goes through the low. Now, if it breaks this right here, it's breaking down. It's breaking the bottom of the bull flag. Now it's below 13. Now it's going to have a hard time getting back above 13. Below 1250, we'll probably see a flush back down to 12. Now, if it holds 1250, maybe I can give this a second. I'm obviously pretty deep in the red when it tapped 1250, but if it holds this level and gets right back up over 1225, 1230, it's straddling the whole dollar right here. But if we break 1250, you could tell I'm going to get slippage on this. We've got bigger spreads. I've got 21,000 share position. There's 1285. We're seeing red, or more red than green. And now, again, it's looking like 1260. So if you were short here, you don't have yet a confirmation to cover. Probably not till 1235 or 1335, 1340. And you have a confirmation to add, which is below 1264. So let's watch 1264 and see what happens. Uh-oh, there's red there. There's more red. I see that and sell a quarter of the position at 75. Try to sell more at 55, but now see, I'm selling, I'm capitulating, I'm giving up into the flush. I've got 18,000 shares. And look at that slippage. I filled 2,400 at 1250. Now it's 1222. There's 1214, there's 1206, and I'm selling into that flush. But I'm not the only one, of course. This is a stock with 7 million shares of volume, up 91%. When it broke that level, that was a trend shift. And now we're back to the halt level down, and I lost $20,000 on that trade. Now, a short seller could have perhaps made $20,000 on that trade. And perhaps I shouldn't have aggressively added so much. This was not a picture-perfect setup. So it was a little too aggressive on that particular trade. All right, let's see if we've got another one here. Let's see. All right, so here, so I'm actually looking at videos where I'm saying that I have a loss, because actually I think those are most likely going to be a good example of a possible short. So I'm up 15,000, it looks like. Okay. Looking for. All right, so let's look at this. So this right here at 15, this is ACY right here. So watch this. We're going to get a false break at 15. The 1 minute chart is already showing us that we hit a topping tail, tapped 15, and then pulled back. Halt level's 15.25. I go long. Oh, gosh. So I take some profit there, I guess. I was already in it. So down, holding small size, orders at $15. Bigger spreads on it. 11 million shares of volume, up 112%. I'm looking for the break of 15. Added right there, 10,000 shares. There's a seller stacked at 80, and I'm in at 70. Halt level's 1504. This right here does look like an okay 10-second kind of micro pullback for a break over 15. But the 1 minute has 4 green candles in a row. So the 1 minute's extended. This is when you have an extended 1 minute, that's a time where it's going to be a lot riskier to take that 1 minute or that 10-second micro pullback, because the 1 minute's already extended. Sometimes when I get into a position, I'll get that confirmation bias where I just see what's good about it, and I don't, like, if I add to this, it's like, why are you adding to this? It's extended on the 5 minute chart. Just cut it. You know, there's 92, there's 95. So look, I add to 16,000 shares for the break of 15. Why? The spread is 69 by 95. My cost base is now 81 with 16,000 shares. It's now the 5th green candle in a row. This has false breakout written all over it. What am I doing here? And it's not breaking the whole dollar. It's not even breaking 15. Is it going to break? There's 1510. This has a high likelihood of doing a false break. I type in the K. That's not great. So I tried to sell half. I hit the wrong button. And look at that. 10,000 share seller pops in right there. See that 10,000 share seller? 10,000 share seller pops in right there at 10:01. And now that confirms a false breakout over the whole $1.10. So this one was actually a little bit of a different trade, but still worth looking at. So let's watch it again through 1480, 1490. Now adding at a level like 1480 when you have a seller getting bought up, that's typically fine, but it's going to be safer when you already have multi-time frame alignment, which is a good 1 minute and a good 5 minute. Right here, all I have is a good 10-second chart. The 5 minutes extended, the 1 minute's extended. And it's on short sale restriction, which does mean if people are going to short it, they have to short on the ask. So those orders will pop up on the ask. So here we go. There's 80, there's 90, 92, 93, 95, and I actually added high for the break of 15. Now we've got a wall at 15 and it's not breaking. It's 96, 15. I could have put an order out right here and maybe filled a little bit. And then right there's a 10,000 share order comes at 15:01. Now look at that drop. Look at that. So now I'm trying to sell it. Oh no, 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 no. Are you kidding me? Are you kidding me? That's a false breakout. That is a false breakout. Did dip trade, try to reduce my cost basis a little bit. That's nasty. That's not fun. So that's that false breakout. And there was enough writing on the wall that I should have seen it coming, and I didn't in that particular instance. All right, so let's see. So this was another one that I said I lost on. So let's see what we've got here. Oh boy, BNGO. All right, so BNGO. Well, so I'm buying on this one. It looks like I'm kind of doing a dip trade at the open with a stop at about 5. And we can see that big bid there at 505, the 50,000 shares. 160,000 at 5. So that's a big bid. I'm thinking this, but it's got 45 million shares of volume, but I add there, stop is probably going to be right around 5. But this is not holding up. Uh-oh. Now it's below 5. Can it get back above it? Volume weight average price. Oh, boy. So I'm in at 509, and this thing is just going lower. Now it's pulling away from 5 to the downside. So I tried to do essentially a dip trade on it, thinking that we had bid support, and we didn't end up having that. So it comes back up to 509, my average. Now, are we going to get the red to green, the breakthrough 515? Needs to clear 510. So it struggles a little bit here. It looks like I sold it break even. So break even trade. All right, let's see. What's the next one? BNGO. You can see it does that flash sort of drop back through 5, and then you get the capitulation where people give up on it. On EBON, I bought this as it was squeezing higher. I looks like bought a 10-second micro pullback, kind of right in here. I didn't wait for a proper 1 minute pullback, just a 10-second pullback. I'm in at 68. And now this is starting to turn into a topping tail. So I'm trying to unwind the position, basically flat. Uh-oh, this candle has how many seconds left on it? 5 seconds, and it's a red topping tail. The candle's changing. It's selling off, and I lose on that one. Then confirmations, it comes back down. Let's see. Kala is running into the 200 moving average. Bingo, BNGO is coming back up to 510, 520. This time I bought 40,000 shares. Look at me. So here's the problem. This is a double top at well, it's actually not a double top. It looked like it for a second, but it just has resistance at 515. Why did I buy there? So on this one, I think I just must have thought if this thing breaks through 515, it's going to rip. So I just start adding right there, and just like that, 40,000 shares, I'm I'm in that too high. I'm not sure. This is a V pattern, and I'm buying the top of it. I don't know if this is necessarily a good example of a short, but you could short off today's open. And, this could be an 8, 10, $12,000 loser as it comes back down. Just terrible. So this was a day of just a lot of rejections. I don't know if that's not necessarily the best example. I thought it'd be interesting, but let's see. Hang on one second. So, all right. Well, I think I don't have any other. Oh, actually, there's one here. There's one here. Let's look at this. Okay, so let's see. So on this one, so sitting at 48,000. So 48, yeah. I thought, hang on one second, hang on one second. Sorry guys, I gotta just run outside one second, but let me just pause this video for the recording. I'll be right back. Just have someone in the driveway. I gotta bring June in. Hang on. Okay, sorry about that. So we're gonna continue here, and so on this one, I'm up 80,000 on the day, and we see TGC, this stock, coming up here to $4. Now, it's already done a triple sort of flat top here once, twice, and 3 times. So and we've also got this cup formation and the handle right here. However, I'm not in it right now. It looks like my last trade was not that long ago though. So I've done pretty well on it, and right now we're getting kind of a break over 4 and then a break back below 4, right? So we've got this kind of issue here. Now, in this case, I put my order at 432, which I don't think was for any particular reason other than I was just giving myself an offset so I could get filled. And we're going to see this pullback and the pop back over 4. No, so I end up waiting a little bit. Surprising I didn't jump there, but I add there as it breaks back over 4, and now I'm scaling into a big position. Now we've got 432. This is looking good. This is the halt level right here at 432. Looks like it might halt going up. Now, what price would it have to break in order for this to become a short? 4. I add there. Halt level now is 442. This generally looks pretty strong. But, I could have also just taken profit off the table. And look at this. 4. Look at that. 371. I've got 44,000 shares at 414. I add. Now I've got 50,000 shares. I buy on the dip. Oh my God. Look at that. 428. Sorry, 28,000 in the red. 411 is my average, and that's 350. Now it's breaking a new low. So, this is of course the risk with trading with big size. While I probably could have fairly easily taken a little profit off the table up here in the 30s, I was kind of going for a home run. I was already up 80,000 on the day. I was trying to crack 100 grand. Stock's up 300%, 36 million shares of volume, and right in here it hesitated. So it's sort of it hesitated here, and I'm going back and forth between being break even and up 10 cents. But it's, there all of a sudden, just that flash. That's that panic sell-off. And I should have tried to unwind that sooner. I could have sold half here. Maybe I got a little slippage, could have sold another half here. That could have been a break-even trade. Now at this point, it had just gone from 340 up to 4. So once again, I'm in full size and the 1 minute is extended. It's a risky trade. It's a risky trade. If I'm going to be full size, it should be when we've got a good 1 minute setup down here. So the break back below 4 was the rejection. All right, so now let's continue on to chapter 10, setup 3.